Hey, happy Thursday. This is Paul with your Thursday market update. We got a lot of stuff that we're going to go through. We're going to go through where the rates are at. We're going to talk about why they're at where they're at. We're going to talk about escrow analysis, home appreciation. We're also going to talk about pending home sales. But before we begin, I do want to bring up and wish all of our daughters a happy National Daughters Day. Now, the truth is, I have daughters and sons. When it's Sons Day, they don't really care about if I post or make a big deal out of it. But I have three daughters, and let me tell you, I had to do three separate posts for each of them. There's one right there. There's two right there, and then there's my third right there. Truth is, I'm a total lucky guy. And you know what? I loved every single minute of it. All right, let's talk a little bit about interest rates and let's get into the market here. So first, I do want to. Whoops, what's going on here? We're having a little. There it is. I want to always start off by saying thank you to people that referred us last week. We had a great success. Somebody was referred to us. They wanted to co-sign for their daughter and buy a house. They couldn't get approved. As a second opinion, they came to us. They are now in contract and set to close in about 25 days. And that is because they didn't give up and gave a second look. So if you know anyone that has been told no, boy, I would love to chat with them. All right, as far as interest rates, rates are definitely up from last week. Now, this is really coming off of what the Fed members are saying about inflation, about the market. The tone is they want to keep short term interest rates up high for longer. Now, how the bond market is reading that is insinuating that there is a lot of inflation still that needs to be controlled. And until inflation starts coming down to a meaningful number, you can expect the interest rates to stay up. Now, the Fed target rate is that 2%, but I wanted to, the core inflation 2%. But I want to share with you to hit that number, core inflation has to hit 1.6 12 consecutive times because how it's calculated, it's average. So that 2%, I'm hoping is a target, is a direction, not necessarily a destination, because that could be really bad news for the economy. All right, let's get into SO. This is super important, especially if you just purchased your house within the last year to 18 months. You see, when you purchase a house, it takes time for the county to update your tax records. So when your company goes out to pay your taxes, when they reach out for the tax bill, because they can't pay more than what is actually owed, they could actually be receiving the seller's tax bill, which is a lot less than what you owe. And that could result in an escrow refund. So right now they are doing a lot of escrow analysis. And what's happening is because it hasn't been updated, a lot of our clients are receiving large checks in the mail, which always feels good to get a large check, and their payment is going down. But I have to tell you, in about 6 months to a year, when the county does update the tax records, they're going to ask for that money back and your payment's going to go up and you're going to have a shortage. So if this happens to you, reach out. I would love to help you out with it. All right, let's talk about some good news for you home owners out there. It's always great to be a homeowner right now, not necessarily a home buyer. It's pretty challenging. But as home prices, they continue to increase even with interest rates rising. The highlighted numbers. Well, first of all, let me explain this. Case-Shiller, FHFA, CoreLogic, Black Knight, Zillow. These are all different. These are all different reports that measure inflation, right? Home appreciation, and the yellow numbers signifies all-time high reading in real estate values. All five are now in the highest it's ever been. We are currently on an annual pace between 5 and 9%. Now, why is there such differences between the two? Well, Case-Shiller, that includes cash buyers, that includes jumbo loans, where FHFA just, includes just conforming loan limits. So you have different borrowers in different areas that they are measuring. But single digit appreciation, my friends, can create great wealth. There you have it. All right, let's move on here. Let's talk about pending home sales. Now you can see year over year, they are down 18.7%, month over month, 7.1%. Lawrence Yun, NAR chief economist, said it right. It is clear that increased housing inventory and better interest rates are essential to revive the housing market. And with interest rates where they're at, people, even though they want to move, aren't making the move because to do that's going to double their payment, especially if they have that 2% interest rate. So hang in there. Something's got to break soon. But I will say this though, if you are a buyer right now and you're brave enough to take on this, the 7.8758% rate, if rates do go down, which I do believe they will, I believe that you're going to be able to, well, I know you'll be able to refinance in the lower rate, but I do think there's going to be a lot more upward pressure on housing prices. And so if you're waiting for rates to go down, you may have to pay more for the house, even though the rate is lower. So with all this said, I always want to extend the invitation, even if you think you're going to buy in the future, or if you have kids or family members that are even thinking of buying, it's always great to have what's called a hopes and dreams conversation. We do not talk about credit reports, pull credit, 30 minutes answering your questions, putting a plan in place, and making sure that we can help you achieve your goals. So the point is, if you're thinking of making any changes, having any issues with your servicer, credit card debt, reach out. I would always love to speak with you and help you. Until that is our weekly update. My friends, you guys have a great week. Thanks for listening. Take care. Bye now.